Vincenzo's Gold Crypto Investing on this December the 20th daily XRP cryptocurrency Bitcoin video to give you that truth, education, and information you've come to expect, deserve, require, and need from the number one cryptocurrency and blockchain and XRP analysis on YouTube and in the social media sphere. And that's why we're the gold standard in coin updates without the hype, without the fleecing, and without the charlatanism with paid promotions or anything of that sort of nonsense. If you want to join me on trading cryptocurrency, Robinhood is the cheapest and quickest and easiest way with XRP, Bitcoin, and the rest of them wallets to transfer in and out of Robinhood, and they just added a few more coins, and the coins will continue to grow on there, along with Coinbase. Those are the two links that I use to trade and hold and hodl cryptocurrency. Look in the video description below or the pinned comment. And yes, you can also to support the channel, become members of C Jabroni Killer for the industry cheapest and best value at $2.69 a month, or super chat to support the channel if you appreciate uh, the information that I give out, or if I've helped you in any kind of way to keep this thing flowing freely and daily. And I did have some comments, is the bull market over? Well, we don't know yet, but we're definitely in correction phase and all the altcoins and entering correction phase in the Bitcoin price. And you can see from the top now, I believe this is our biggest correction since we started the massive pump. After we got up to just above 108,000 at our wick low, we were down 15%, right? And that I think is one of our biggest corrections. And if we go and we like to look at this in the daily time frame to confirm flips, and you can see now for the first time since we were sitting back here pre-breakout just before the presidential election, that we've actually touched the 50-day moving average, or the short term in the daily time frame, back on about October the 10th, right? And since then, we have not touched the 50-day moving average. Get out of there. No, we want to be back in the full screen so my audience can see. We have not touched the 50-day moving average since about October the 10th, and we ran up 79.35%, or about 2 months in between, almost exactly 2 months without hitting the 50-day moving average. We got close a couple of times, but that's significant because now what you would see, and you're looking to watch out for as the sell volume has been taking over, is we had that nice bounce back. Do we trade back up into, say, a shorter time frame like the 4 hourly and get rejected now in the 4 hourly? That's where you can go from the daily to the shorter time frames. Do we wick off the 50-day in the daily time frame, come all the way up to a declining 50 and 100-day moving average, and then get rejected and breach that critical $89,000 or major support level that we've been watching out for ever since we broke above it, and maybe come down closer in the daily time frame to the 100-day moving average in blue right there. So that's what we're watching out for, right? You got that, you got the moving averages in the 4 hourly that could be starting to be used as resistance now that you've dipped and touched a local support level. And we're going to be paying attention to see if you break that $89,000 level, your next underneath target, if we are in a step down pattern or a step down phase, would be the 100-day moving average in blue at $83,000. And we're just going to move these up just to make this easier on my life. And then the last line of defense to hold the bull market structure would be holding at current price, and this will continue to rise up a little bit, the 200 or long-term moving average at 74,135. That's how you would know that you're holding the bull market still. But if you came below this 89,000, which I think is a high probability that you're going to hit this 100-day moving average, if you came back up and got rejected at this 89,000 again, that might confirm maybe the start of the bear market, right? In Bitcoin after a phenomenal move ever since the Donald Trump election and ever since Donald Trump won. We've been up from the wick low after our old all-time high back here in early 2024. From our wick low of about 48,000, we went up 125% to an all-time high and breached 100,000 for the first time ever. So we could be looking at the start of a big correction slash short to medium term bear market, but we're going to have to continue to watch out. And all I can do is continue to give my thoughts and news. And you can see Bitcoin dominance with the altcoin rally or with the altcoin dumping. You can see Bitcoin dominance as people start to sell out some of those massive profits in the altcoins. They put them back into Bitcoin, whether Bitcoin's going up or down. And Bitcoin dominance rallied 10% and actually briefly got back up to 60.1% in Bitcoin dominance. Now it's had a little bit of a sell off and it's currently at 58.28%. And that's going to be something that we're watching out for because oftentimes when you get a big fall, ah, if I wanted to buy you, I'd fucking buy you. But we often, on the initial dump in Bitcoin dominance, it's profit taking out of Bitcoin, and they dump the money into these altcoins to try to ride the pump. And then when they get those altcoins pump up a lot and they get a little nervous and want to take some of those big profits, they dump it right back into Bitcoin. And then you see Bitcoin dominance pump back up. And that's the correlation that I see. And the Federal Reserve was also a big player this week on Wednesday, lowering interest rates of a quarter basis point, but now are saying they're only going to lower rates. We'll get to the AMP in a bit of a minute here. They're saying they're only going to lower rates next year 2 times instead of what the market had baked in 4 times, because the problem is that the lower the interest rate, the cheaper the money is, so you can pump asset prices and stocks, real estate, housing, cars, uh, anything like that. But say you went negative on a negative interest on a normal interest rate, the lender gets paid interest from the lendee, right? So if you put money in the bank, you're lending the bank money, hence they pay you an interest rate. Now, say you get a negative interest rate. If you have a negative interest rate, if you put money in the bank, you are now, you now have, the lendee now has to pay interest. So you would have to pay the bank an interest. If it's a negative 1% interest rate, you would have to pay the bank for having your money in the bank 1% interest a year. But on the flip side, say you borrow money because the bank would be borrowing your money and now you're paying the borrower interest. Say you take a loan out for a house. This is how upside down things get. Say old Vincenzo wanted to take $100,000 out to buy a house. In today's market, I would have to pay about 7% because the bank's lending me money. But in a negative interest rate world, 1%, say I take $100,000 loan out, the bank has to pay me 1% for taking $100,000 loan out. Now that's upside down. And I mean, come on. That's just craziness and lunacy. The person taking the loan out gets paid interest. I mean, how much more asinine can you get than that? It's supposed to be the lender gets paid interest from the lendee, and the person borrowing the money has to pay interest to the people that are loaning them the money, right? Not the other way around. So it's very, very ass backwards when you think about it. But so the stock market had a little bit of a decline or a pretty big correction, the biggest correction I think this year in a week's time span or a 3-day time span since the Fed talked. The gold market dumped and the crypto market dumped along with it. And XRP or XLM were here. You know, I've been short to medium term bearish ever since we've been in here, coming off that 63-cent top. So I've been short to medium term bearish for about a month now. And you can go back and watch any of those videos from about the 26th, 27th in November, all the way to the current date. And I've explained to you if you want to see why I've been bearish. And one of the major reasons are you have a steadily falling and declining volume when you had an up and sideways price action. And I've been talking about the moving averages in the daily time frame. When you double bottom here and then had a ferocious rally, then you double bottomed here and had a wick up, and now you've rolled over to a new regional low after since this pump started, and you're down from the high. And since we got bearish, from the high, you're down at wick low 50%, and at current price 40.32%. And we've been telling you we could see the moving averages come. Now we're at 35. We could come back to 43 and then get a harsh rejection. Or on a thinly traded weekend, we could even come all the way down to this 26 cents, which we've been talking about, breach the 23 cents, which is a major support zone in XLM from the first wick top right there when we hit 26 cents. and then maybe even come down to the 20 cents, which is the 200-day moving average in the daily time frame. But as long as we hold the 200-day, even though that would be about a 70% fall from the all-time high, it would still be about 120% up from its regional low earlier in the year, and the bear market would still be there. But I do think we're going to play these moving averages, and I think in a step down fashion. And then I think if we did tap the 200-day moving average, which by the time you got there, it might be up here at 23 cents. But I think you would have a ferocious return rally, whether that would be to continue the bull market or just a return rally. But say the 200-day moving average was here and it hit it in about a week's time frame from now on New Year's. I could see it having a ferocious rally all the way back up into that 35 to 40 cent range, which would be a 50 to 80% move. And that would be a very, very quick move or a V-shaped recovery with all the big buyers coming in, people that took off profit at the top or people that felt like they missed out on the first run, getting a chance to briefly buy a wick low at 19 or 20 cents. Not saying it's going to happen, but I've been short to medium term bearish and I'm still short to medium term bearish, just like we've been for the last couple of weeks. Same thing with the XRP. Ever since it topped out at 291, we got short to medium term bearish right after we got rejected off of this wick right here at about 270. And then we immediately rolled over on itself. And just watch any of the videos since early December. We immediately fell down 28.3% from there. And we were telling you that $1.90, this double bottom, was going to probably $1.89 was going to be tested again. And now in the daily time frame, you can see the 50-day or the short-term moving average is almost there. And probably by the time we breach it, it's going to be there. But that we would hit the 50-day, and then we had to watch the underneath moving averages as we had $1.33 now as they're uptrending and 95 cents as major underneath support in the XRP price. And again, the XRP price is had the same thing as XLM. You have a steadily falling volume. The mean of the volume is that line right there, and it's sharply declined now in the daily, and it's sharply declining now in the mean of the volume too. So we could be in for an even bigger correction, but it's still a bull market correction as long as you hold that 200-day moving average in the daily time frame. And you can see it's actually up a little bit higher on today. It's sitting at $1 now. As long as you can hold that, you could still say you're in a bull market, but that would be a very harsh correction from the 292 top down to about $1 would be a 64% correction. But in crypto, that happens but then I think you could have a ferocious V-shaped recovery to get back some of those gains or to make a very, very nice swing trade, right? So those are the things I'm watching out for. This $1.89 is critical because if you break that, you're likely to flush in a few days to a week to 10 days after that, all the way down to the $1.33. If we look at Shiba Coin's the same thing. Algo is another one. We got harshly rejected off that 50 cents. We've now breached this 35 cents. And like we were talking about, you would fall very, very quickly down from the top part of this trading zone at 35 cents in red. And if you breached it, you would have a big fall very quickly. And off the initial dump yesterday, we went down 21%. Now we've returned rally back. But if you can't get back above this 35 cents and hold it, you're going to fall from current price another 33% down to the 23 cents very, very quickly. XDC is another one. We're coming now on some of these moving averages that we told you back a few days ago that if you were up here, you had to hold these conglomerate or moving averages in the daily time frame. And the short term is at 6.25 cents, and the 200 is at 4.33 cents. And these are two areas you would have to hold, or you could be making a big, much, much greater fall down to about the 3.25 cents. So these are all things I've been warning you. Zill's the same thing. And Zill is actually dumped harshly at the 0.037%. It was getting rejected when a beautiful subscriber wanted me to look at it. And we told you you would have to hold these moving averages. And now we actually dip below the moving averages. Now we're sitting just on top of the 100-day at about 2 cents. But from its top to its wick low, it lost 51%. And at current price, it's 41% down. So you can see a lot of these altcoins have lost 30 to 50% at current price from their bull market highs. The Dogecoin's doing the same thing. We had our 21 cent area that you have to hold, but you have come down quite a bit from the regional high of 48 cents to a wick low of 26 cents. And now you're sitting at 32 cents. And we're going to keep paying attention to see if there's going to be a big flush and an actual bear market show up, or if this is just going to be a short-lived correction, a short-lived profit taking. And it's something that we have to pay attention to. But I feel like I've been giving you out ahead of this, even as these coins were up 40% higher than they are now. I was letting you know when I was short to medium term bearish on coins that people, again, were saying we're going straight to $10. I just try to keep it honest, shoot you straight like Shooter McGavin, and keep you out ahead of what I think is going on in the short to medium and long range. And that's why we're the gold standard in cryptocurrency predicting. Let's see if there's anything interesting in here. XRP, no. Bitcoin price collapse. XRP, Solana. Bankrupt New Zealand crypto exchange, Cryptopia. They always use those names, Cryptopia. It was uh, the exact opposite of a utopia, right? Returns millions to users following liquidation. El Salvador continues to buy Bitcoin. XRP price readies for a 490% upswing. Conveniently enough, it went down 20% on the day that they released that article. Over $1 billion liquidated from the crypto market on December 19th. This is interesting. The cryptocurrency faced a major shakeup. Over 1 billion in leveraged positions were liquidated within 24 hours, according to data from the bulk of these liquidations, roughly 856 million were from longs, right? Remember, we told you when all the shorts got liquidated a couple of weeks ago when we breached $100,000 for the first time. We said this is usually the time there will be a big correction to the other way because everybody's loaded up on longs now. And 856 million longs were liquidated, signaling that bullish traders were caught off guard by the sudden price drop. And that you some can call manipulation, or some could call that's just common sense logic uh, in the markets when everyone starts to leverage one way by the majority. Uh, in the super majority, it's going to correct the other way to wipe those people out that are on leverage. Bitcoin, which had maintained strong momentum the past 30 days, slipped below the critical 100,000 psychological mark. Federal Reserve signaled more hawkish stance. Bitcoin dropped to local 93,000. December 5th, Bitcoin price plummeted 5.4%, wiping out $300 million in leverage. On December 10th, when over 1.7 billion in crypto positions were wiped out in just 24 hours, and that means they're gone forever. It is out of the retail trader's hand, into the exchanges, and into the one percenters. As of now, Bitcoin is trading around 94,000. And that's something that we have to pay attention to, but you can see all these Bitcoin pullbacks, not including the COVID capitulation from the last bull cycle, 18%, 15%, 21%, 16%, 31%, 25%, 18%, 58%, 30%, 25%, all within 16 months. So buckle up. We're going to have a wild ride here, all leading into Donald Trump taking office for his second term, promising to be the crypto president. Was it all bark and no bite? Will he come through with some of the things or all the things that he said he was going to do? Only time will tell. And was this just to buy the rumor and sell the fact? Uh, we're going to have to wait and see, but I'll keep you updated on these daily cryptocurrency and XRP and Bitcoin videos. Peace and love to you. Yes, my lovely, glowing, beautiful audience. Peace and love.